Hello, everybody. This is Alan Hollander and my wonderful colleague, Sarah Boylan from ePractice Manager. Welcome to our podcast, Inside the Practice, where we bring you, we hope will be very insightful guests and information. Today, we're delighted to have Morgan Hamon. Morgan is a CPA. He led the HDA accounting group for about 20 years, I believe, Morgan?
Yeah, right. 15 years.
15 years, okay. And HDA had about 900 dental clients. That's a big number.
Yes.
And his firm, HDA, has now merged with, if that is an accurate description, EisnerAmper, another group that is involved in advising dentists. So he's a qualified expert who specializes in streamlining finances and helping dentists improve profitability. This is something that we are very big believers in and have been doing ourselves for about 30 years from a different angle, practice management, personnel, and so forth. But certainly equally, if not more impressive, Hammond is a former naval aviator. He flew F-18s.
Yes, back in the day.
Yeah, trained pilots on carrier landings and air combat. Morgan, I'm impressed.
Oh, well, thank you. I'm very happy to be here. Appreciate you having me.
Yes, of course. We'll get started, and I want to ask you. You've got this very interesting resume in the dental world. How does a Navy pilot end up deep in the numbers with dental practices?
As an accountant, well, growing up, my family, they're all CPAs. My dad, brother, cousins, everybody. But I was the rebel. I wanted to go be a Navy pilot. So then I was on a Navy scholarship in college. As soon as I graduated, I was off to flight school. So I spent 11 years flying F-18s, West Coast guy, deployed Iraq, and then was an instructor pilot after that, which was very rewarding. But as I got into my mid 30s, it was time to grow up and kind of get a real job. So I left the Navy, back to school. And, growing up, I said, I'm never going to do that. I don't want to be an accountant. But turns out it's too ingrained in our DNA. So I went back, got a master's in accounting, sat for the CPA exam. And then at that time, it kind of worked out that my dad and I were both needing something to do. So we essentially did a startup. HD accounting group, and then by way of just some luck and incredible opportunity, found ourselves in the dental space, private dental space, and just never looked back. And so it's purely dedicated private dental is our world for the last 15 years and counting now.
Interesting, and that's a significant growth curve, Morgan.
It is. We've been very fortunate with growth and continue to do so. I think it's just because it is such a tight niche, and we've endeavored to really just focus on some key services, do a good job with responsiveness being sort of the key ingredient there, and just do a good job for these dentists. It's very rewarding. You do the right thing and you grow.
Simple formula, and it does work. It's funny because when you talk to doctors, which of course we do constantly, about professional services and just vendors in general, responsiveness is such a hot button.
Oh, it's key to our culture. And we don't just talk about it. I mean, our most expensive software is our email management, because it allows us to monitor and police our responsiveness.
Yeah, makes complete sense. Well, given that, because we talk to a lot of people who are involved in financial support services and CPAs and so forth, and I'm interested that what part of your background do you think gives you a different lens, if you will, when it comes to finances and dentistry?
I think what allows me to connect with our doctors is it wasn't so long ago that I didn't understand any of this either. Right? When I was a Navy pilot, I was a W-2 employee. I would get my paycheck and I would just look. It was all Greek to me. I just say net pay, great. I don't understand the taxes. At the end of the year, you either for some crazy reason I either got to owe a little or get some back. It just none of it made sense. And so I kind of get what it was like to not really understand a lot of this in terms of entity structure and tax classification. So I think I can connect and explain it in ways that may be a little more relatable. And then of course owning a business. I mean that's our world too. It's not just clinicians. It's those doctors that have wanted to be in practice ownership, and that's a whole separate skill set, a whole separate set of demands.
Yes.
And I think my Navy, and that requires leadership.
Mm.
And the Navy, when you're a Navy pilot, you're an officer first, and they groom you for that first. And that is a lot of really invaluable leadership training and skills that you acquire. Of course, I didn't realize it at the time as a young man. Like I'm just going through the program, trying to do a good job. I don't realize all these amazing skills that I'm being taught and just how well the Navy does it. I didn't appreciate that. I certainly appreciate it now. So I think the combination of leadership, skills and background, a passion for it, and then being able to relate some complex topics in ways that I think are more relatable to dentists has put me in a unique position to advise them over the years.
Very good. It's very good. It really does resonate. It reminds me of the Michael Gerber E-Myth. His classic quote, which I will completely mess up, but he talks about how an individual who is a technical expert is not necessarily an expert in the business of that technical topic. And
No.
so what you're saying about the leadership issues and understanding the business side, which is, of course, what we live and breathe all day, completely understand that.
Yeah, it's a separate skill set, and my employees over the years they've heard me say it. Maybe they might get tired of me saying it, but the business of public accounting is different from the practice of public accounting. And it's the same in dentistry. The business of dentistry is different than the clinical practice. You have a different role when you're outside the operatory.
No question about it.
You have to master that.
Absolutely.
Well, guys, I'm dying to know, how would you describe the economic climate for dental practice owners right now today?
I think it's still very healthy, and the barometer that I go by is, just over the years we've worked with hundreds of doctors that have done de novo scratch start practices. They have a project going, or they're doing a first time purchase. And I still see very healthy levels of interest and growth there. And so that's sort of my non-statistical barometer. There's still a lot of dentists doing startups, buying practices. Our clients are doing well. So I think overall the economic outlook is good, and which has been a long-term trend. I think if you really get down to it with our dentists, it might just depend on where they are in their journey of business ownership. The 15, 20-year veterans, they're doing fine. The newer, younger practice owners are going to have the same anxieties I think they've always had. Like got my student debt, I've got this practice loan, I got all these new employees looking at me, got to tell them what to do. Like I really want this all to work out. So I think that anxiety is still there. Industry-wide, I mean, I'm sure we've all heard the same thing. There's some, the hygiene pay, staff costs increasing, reimbursement rates not coming along with it, right? And economically, like that doesn't work. All right, so we have to find how to address that, whether it's through fee escalation or maybe doing things different clinically. Some of that's in my lane, some of it gets out of my lane. But ultimately, any small business, it's not a public service. This is a profit, there's a profit motive here, which means you have to deliver a compelling service at a market rate, whether you're selling accounting or dentistry, which means you gotta if the hygienist is making $50 an hour, you got to figure out how do they can do that pro fee where you get an appropriate margin, whether
Absolutely.
that's going fee for service or renegotiating rates.
Yeah, absolutely.
Yeah, so you definitely touched on two pain points right there. Fees not increasing, and pay for all staff members too has really kind of gone up. Are there any particular data points that have surprised you recently?
Not that has surprised me. Staff cost. If we look at trends, and I'll clarify here. I'll be specific. My visibility into the dental world is our roughly 1,000 private practices, and those tend to be entrepreneurial folks. So that's my lens that I look into. The long-term trends I've seen is, staff costs is incrementally increasing over time, and we measure this every month. It's very easy to track. Gosh, 10 years ago, like 25% was a good kind of non-doctor staff cost that came up. For years, it was 27.5. COVID was real interesting. It went all over the place,
Sure
including
did.
a pretty massive dip, which initially you'd think was good news, but it wasn't good news. They were understaffed, and then it's come back up. So right now we're trending 28.5, 29%. Right, so it's elevating up. That's not entirely surprising. What's come down is like clinical supplies. I've seen, again, within my window. But for years, 6% was the benchmark. Boy, we've been solid. That's dropped a point, so it's like 5.1 is pretty typical now. So it's like people have gotten more expensive, supplies have gotten less expensive, so we've seen that. I don't know if any of that's really shocking. As a business owner, if staff costs are escalating and that's the market rate for what it takes to have a qualified person in the practice, and we're trying to maintain a target that makes economic sense, which is, in my opinion, definitely sub 30%. The only fix is cost escalation, or I'm sorry, fee escalation.
Right.
And you just have to do it, whether you're fee for service and raise fees or negotiate. I tell the dentist, look, raise your fees anyway. Even if the insurance reimbursement doesn't go right along with it, raise it. You got to have some data to go and justify that. It makes no sense for the competitive pay for hygiene getting near $50 an hour for the reimbursement rate to not also go up.
Yes, absolutely.
Yeah.
Yeah, we're big believers in that. It's difficult. Business owners are sometimes afraid, as you've probably seen, to raise fees. They think they're going to lose patients or lose clients. Generally speaking, that isn't true.
Right. And every year, I like to stay in touch with our doctors and send out meaningful content. I don't do spam newsletters. I tell our doctors, look, if you get a message from us, like, read it. I'm not sending out filler. They have to escalate fees. Yeah, you have to. Your costs are not going down, and there is a fear of that.
Yes.
Along that same vein is maybe there's one particular insurance where the reimbursement rate is particularly atrocious, right? And that can be a real gut check. Let's say that comprises maybe 30% of your patient base is on this insurance, and they're reimbursing you, maybe 40%. You're taking a 40% write down, or just as an example. That's a real gut check, because what you're doing when you drop that insurance, you are raising fees. In a sense, you are raising fees. Like, hey, we're not taking this. But what I tell the clients, look, when you raise fees, if there's client attrition, let's say it was purely proportional. We raise fees 5%, we lose 5% of clients. Well, you're going to make the same money and have more time to do a better job.
It's actually a net gain. It's actually a net gain.
Yeah.
Yes. I couldn't agree more. We've worked with clients. We're very familiar with this whole concept just from the management side, because we're big believers in those atrocious paying when a doctor has to rely on those atrocious paying plans, there are other issues in the practice.
Yes.
And there are ways to put in systems that will transition a practice away from those types of plans to nice private pay.
Right.
And of course, nowadays you have these more expensive treatment plans, Morgan, that I'm sure you're familiar with. Implant cases, not surprising. $5, $10, $15, $20, $25,000 plans. Well, most of these, and most of dentistry, in fact, it's really elective. And so they have to know, if they're not adept at how to properly present the treatment, and forgive the term, sell, then of course they're losing business. And so we focus a lot on that.
I couldn't agree more. I have two thoughts there. The first is any business, whether it's an accounting practice or a dental practice, you have finite capacity, right? You have finite number of ops, finite number of people. You have so much time, and so where do you want to allocate that time? Like, why, if you've got a large portion to this really horrible plan, that's taking up room that you could grow with patients that will pay you what you're worth.
Yeah,
so
absolutely.
you get past that gut check. Alan, I, as an accountant, we certainly talk profit, and I think accountants, they kind of run to the math, right? Like, on the profit equation, there's two variables, and this is right on our monthly report, our practice profitability analysis. Two factors that impact profit. There's your cost, your expense structure, right? Expenses, you could be overspending, and that's sort of the go-to answer. If anyone's feeling tight on cash, or they see their profit margins low, the default go-to answer is, where am I overspending? I need my P&L. I got to go figure out where am I overspending. So that's one side of the profit equation. The other side is revenue, which we've been talking about. Right? You have to charge what you're worth, but you have to charge, bill, and collect what you're worth. If your collection process is broken, that will lower the profit margin very quickly. But where I'm going with this, Alan, is just what you said, because I've come to the opinion over the years that the profit equation, just the pure math is okay, revenue, expenses, but I think there's a third variable, and that's the effectiveness as the business owner. And you have to present your value proposition. Absolutely. Whether that's to a patient, or for me talking to a dentist, you have to be able to articulate, what is that value? What's the benefit? Why is it worth that investment? And I get asked all the time, Alan and Sarah, all the time, Morgan, where, you got clients all 50 states. Where's the hot area? I'm going to be doing my startup. Where should I go? Where are they making money? And so I hear that all the time. Okay, well, I'm going to specialize because I really want to make sure I'm profitable. So I'm going to specialize. Yeah, okay, I tell them, look, there's no data to support any of that. If you ask me, who's the dentist making let's quantify success. Is it dollars? Is it time? Is it both? I think it's both. I think it's high income with high quality of life, if we're going to quantify success. The dentists that do the best that I see are those doctors. I call it, they have the full package. Yeah. They're obviously amazing clinicians. I'm not qualified to have an opinion on that, but they obviously, yes, they got it right. They're great doctors. But they are great business leaders. I can tell by talking with them. Like they inspire their employees. Their patients are comfortable. They run a tight business. They don't tolerate things broken in their business. Yes. These are the people that make most money. It's not what city you're in. It's not what your specialty is. It is how well do you run your business. You're an excellent clinician. You're also an excellent business leader, and that's the secret, in my opinion.
Amen. That's really been this is as a practice management firm, that's been our mantra has been that your practice will not grow beyond your level of management skill. And where you see practices plateau, yes, there are economic and other environmental factors connected with it. But senior to that, to your point, is the management skill present in the practice. It's either the doctor and or he or she's managers, supervisory people who can ensure that the business activities are implemented properly. And yeah, with you 100% on that.
Yeah.
Sarah, I'm sorry, you were gonna ask.
I do, and I don't want to go too off topic here, but I'm just curious. When you get a new client, how often do they have a budget? Like, just like, this is like well thought out, these are my categories. Do they come to, or do you have a majority of your clients come and
We have some clients that really like to budget, and if they want to do that, we'll help them budget. But when I'm interacting with the clients, to me, it's all about margin. It's about profit margin and what's impacting that profit margin. I mean, the budget is great, but there's so much volatility in the dental practice and just in the industry. And you've all seen it. We see it on our report. We'll graph out trailing 6-month revenue versus operating expenses. And a lot of times that chart looks like an EKG with someone having a heart attack, right? I mean, it's up and down month to month. Part of that's the industry. So if you're gonna get real granular in a budget, in my opinion, the utility can diminish pretty quickly, just depending on how much volatility is out there. And some of that's, it could be within the dentist control. Sometimes it's just out of their control. So if our clients want to budget, we will, but we tend to focus on margin. Is it acceptable? And what are some opportunities for profit improvement? And we like to break it down to like 1 or 2 action items, right? That they'll actually do.
Good
because
point. Great point.
That's why we own businesses.
Yes.
We own businesses to have appropriate profit. Otherwise, why bother? why go through all this if we don't have appropriate profit?
Yes, absolutely. What do you see? Just curious. You work with so many practices. What are the from the financial side? What are the landmines that they run into? What that they could have avoided? What do you see as these
hands down
things that they trip on? Yeah.
Hands down, it's the collection process.
Interesting.
It's the collection process at the practice. So, and the reason I know that is because we asked to see it. Because what our role is, our mission is, let's diagnose. If profit margin's low, we want to diagnose that. We know what it should be. And as I mentioned before, to kind of circle back, well, it's the expense structure, and yes, we will benchmark our entire client base on a trailing 3-month average on every report. We can see what everyone's doing, and we can line it up against our clients and see how they're doing expense wise. But the other variable is the revenue, and revenue is impacted by the collection effort at the practice. So we ask to see every month accounts receivable aging. Now, these are all pass-through businesses, right? We keep the books on an income tax basis, which every accountant will do. So a lot of them don't ask for AR because it's not relevant to their books or their taxes, but we have to see the AR aging. In my opinion, if total outstanding AR, patient and insurance, is exceeding 1 month's worth of average production, then I start scratching my head, like, why is that? Seems like a lot. Like, we got some money outstanding, but then we have to dial in, how old are these receivables? Ideally, most of it's current. That's great, right? Check should be forthcoming. 31 to 60, we should have a big drop off there. 61 to 90 is where I really drop anchor and say, look, you really got to take a look at this, right? We saw this patient 2 to 3 months ago, and you're not paid yet, and you need to know why. For the practices where the collection effort is just broken, that will erode the profit margin faster than just about anything, and it's real easy to spot. You just got to pay attention to it. And where I've seen, to your point, Sarah, over the years, we've had a couple, startup practices where the dentist, they don't know how to bill insurance. Like I don't know.
No idea.
So they hire, oh, I got this billing insurance. Boy, on Indeed, boy, they look like they're looking good. I'm going to hire them. But, it turns out they're really good at interviewing, and they don't know how to do it either. And so the doctor, they're just working along. Everything's great, but you know what? There's no money in the bank.
Yeah.
We've had a couple startups where, it took the first 90 days to figure out that was happening, because that's when we see the AR aging into 90 days. And like, look, your bank account's empty because it's all in someone else's bank account. That's all. So I think, to answer, that's kind of a long answer to your question, but that it's the collection process. I mean, there is no higher, more important administrative function in any business than your billing and collection.
Yeah.
If you're not going to, why schedule?
Yeah. No, I'm with you completely. It's interesting you talk about a newer practice, a new doctor. We're about to launch a national program for new doctors, we're gonna promote this through the residencies around the country, and to upcoming graduates, as well as doctors who are just in, because we get lots of them over the years coming to us, and they're missing so many of these basics. We're putting together a whole curriculum for this. Love to talk to you more about participating in this with us, because it's a large group, and man, do they need it.
They need it. You can't. It's such an important function that I think can be difficult for the doctors to oversee.
Yeah,
and
I'm with you.
And I like my analogy with the doctors is, look, as the CPA, I'm kind of like the radiologist. Like, I can look at the imagery and diagnose, but I can't operate on the practice. Like, if the collection process is broken, we can diagnose that very quickly, but I don't know how to go teach you how to, make sure that's happening. But it gets in your lane, right? So
exactly.
Very, very symbiotic, but
exactly.
So I wanted to chat a little bit about growth and expansion. How do you advise doctors to get ready to take on more capital equipment, whether they're looking for adding a cone beam or something like that? What's your methodology about trying to evaluate what the practice health is, and when to pull triggers, and what's the best tactic?
I love that question. I want to add something to it, if I may, Sarah.
Yeah.
Sure.
There are so many practices now, Morgan, who are jumping in on, there's AI, AI is there, it's happening. Digital workflow is just such a buzzword in dentistry now. And a lot of doctors, as Sarah's mentioning, scanners, photogrammetry, printers, 3D printers.
Yeah.
They want to buy their sprint rays. We're talking easy. It's easy to spend, a couple of $100,000 on this. Yeah.
Yes.
What sort of, they must come to you and ask you about, hey, Morgan, are we ready to do this? Very interested in your view on this.
Yeah. So they come to us, not necessarily. There's sort of two aspects to that. And where we get asked most is like regarding tax. Like, if I buy all this, am I going to save on tax? And, the answer is yes. But listen, I say, make these large investments based on the operational and clinical needs of the practice. All right. We're not ever spending money to save on tax. You'll end up being very cash poor. Operational and clinical needs. And then you can plan those accordingly. You have to have the appropriate tools of the trade, clearly.
Yep.
I would caution, again, some of this, and I try to be very, very forthright. If it starts veering out of my lane, I'll say so. All right, because we walk a fine line. We're not practice consultants, so I choose my words very carefully. We're advisors. I'm not consultant. I don't want to mix the streams there. But I do know sometimes it can get a little addictive, right? When they get all this new stuff, A really good friend of mine is a dentist, a client known for years, and he even said, he bought a cone beam. He doesn't really need it, but he just wanted it. And he's like, I kind of wish I hadn't done that because I'm making this payment on it. It can get a little addictive, I think. Certainly, as the CPA tax advisors, those do result in some pretty nice tax benefits, which we're very happy to
Sure.
take advantage of for them. But I say, look, as a CPA, if they're just coming to you and the only idea is let's go buy more stuff, like let's find someone else, right? You may need that stuff, but it's the operational and clinical needs of the practice. So that's what drives it in terms of, okay, now we need it. How do we get it? Well, there's a couple choices. Okay, do we have cash or do we want to take financing? The tax benefit is the same either way, and sometimes that can be news to them. So whether you pay cash or get a loan, you get the same tax deduction in the tax year that equipment was placed in service. So let's pick an option that fits better. With a practice note, again, most practices, unless it's a very mature practice, been around a long time, it'll usually have some type of practice note, whether that was a scratch start or a purchase. What we do, we measure that, and this can get a little confusing if somebody's just getting a basic P&L. Sometimes it's hard to wrap your head around, okay, what is that debt service cost? Because when you write that check to the bank, only the interest is deductible. The larger portion, the debt principal, is non-deductible. It's just straight cash out. You got to pay tax on that money when it goes out. And it's not a line item on the P&L, right? Because the loan's on the balance sheet. Well, on our report, we know that our clients, look, they don't understand how the P&L and balance sheet relate, right? So we do that for them and put it on the report. The metric I like to show, okay, what is your total cost of debt service? Measure the whole thing as if it were an expense, right? That has to be done annually. The loan principal and the interest. Here's the number. It's about 8%. Is pretty typical when you look at that. So if a doctor says, look, I want to expand, I want to buy the space open next door, right? My lease, and I want to expand. So if you can lease the spot next door and knock out a wall and like not have to move your office, that can be pretty ideal. All right. So let's say we're going to do that, but we need to buy all this new equipment. Do we want to cash or get a loan? Well, if we don't have the cash, then that narrows it down, right? If you want to do this, we got to get some financing. If they have cash, then we have to decide, okay, well, how much cash do we want to part with? Which means we have to look at the operating cash reserve. The way we quantify an appropriate operating cash reserve is it's a multiple of the practice break-even point. The break-even point is all your operating expenses plus debt service, no money yet to the owner whatsoever. That's a pure break-even. Most practices now, if I were to get super granular here, it's about 1.8 of break even as a cash reserve.
As a cash reserve, 1.8 in cash.
You're right. So, and let's just round that to 2.0 to make it. So
okay.
If a practice has a 50K break even, most of our clients will have 90 to 100K in the bank.
Okay.
As a no lower than.
Okay.
The reason for that is just to make it easier to manage the cash. Okay, the Shine bill comes in the same week as rent, the same week as payroll. You just pay it. I don't have to worry about it. Interesting. Pre-COVID, our client average is about 1 to 1.5. COVID hit, PPP money flowing in, all this good stuff. That ballooned to 3. And then after COVID, it stayed at 2 times break even for like 4 years. And it is only recently, in like in the last 6 months, our client average has kind of dipped below 2. And I think it was just through that trauma of COVID, people just slept a little better at night with a little more money in the bank.
Yeah, there was sure a lot of it that was being built out, no question about it.
So back to what I was talking about. If they decide, so the operating cash reserve, that's a personal decision. Every business owner decides. Like we have some where they cut it real lean, and I'm like, okay, That's not how I would do it. I guess you can sleep at night with just a 0.5 break even. But whatever it is, let's say they've got a practice with, with a 50K break even and they're cool with 75. We would look at the cash in the bank. If they're sitting on 300K in their operating account, I would probably tell them there is a higher and better use for that money than sitting in your operating checking account. So why don't you take like, you could take 150 or 200, purchase the equipment and finance the rest, or maybe that'll cover it, just depending on what the budget is. But that to answer you, that's a really long answer to your question there, Sarah. You look at what are the needs, and then are we going to do cash or finance? And you're only going to have options if you have extra cash, right? But then you have to go look at finance.
Great answer. Very complete. One question I have: the 8% number.
Mm-hmm.
You were referring. Could you just clarify what that 8%?
So that is your full.
Reflects.
Like if you look at it, that's an overall number. If you look at all the loans on the practice, and it's not uncommon for practice to have a couple. Like they got their practice loan, and then they wanted the new piece of equipment, right? So they finance that. We just look at kind of the aggregate debt service.
Loan payments, debt service. Okay.
It's the total loan payment against collections, about 8%. And I do look at that because let's say someone's wanting to expand, they don't have a ton of cash, and they're already running like 11, 12%. Then I got to ask them, look, are you, like, if you buy this, is it really going to make revenue for you? Because you're already running a little bit high on the debt. How far do we want to go?
Yeah. Good. Thank you for clarifying that. Hey, let's just talk for a moment here. Last few minutes. Just very interested in hearing your thoughts about this. Like what happens after the tax season? I'm assuming you have lots of communication with your clients based upon how you operate, which I personally really like to hear. Yeah. What should practice owners be doing the other 10 months of the year to stay sharp financially and stay on top of things?
This is my personal opinion that I think if we're just talking about just, we'll call it financial hygiene, right, of your practice. I think it makes sense to, once a month, have a look at your numbers. It's not a half-day exercise, right? So for our clients, they get their practice profitability analysis, look through it. Mm-hmm. With our clients, if they want to schedule a time, like we have on-demand scheduling, just go click the link, and you want to go through with us, we'll go through with us. And I'll tell you, if they end up doing it with me, we're going to boil that down to no more than 1 or 2 action items, right? So go through, okay, what is the actionable data, right? Is there actionable data? Sometimes what the financials are telling you is the corrections you already put in place are working. Mm-hmm. So the action item is keep doing what you're doing. Exactly. It's not always go change something. But exactly. If there is an action item that can put more money in your pocket, identify what that is and make it happen. And that's why I like keeping the list low, right? Yes. Make it something you'll actually do.
Yes.
So that's what I would recommend as a matter of practice. Like every month, have a look through your finances and identify, is there an action item that could help, and then make that happen.
I'm sorry.
I think new business, I've seen some real, young doctors, they feel that things are out of their control, right? And that's normal, right? You own a new business, it can be a little overwhelming, and so to feel in control, they just want to pour over something, right? And we had some where they want to get so granular into their P&L, and I'm like, look, when we post the electric bill, like that's not going to radically change. I tell them, like, if you want to feel like you're in control of something, right, that's going to help, like, don't obsess over your P&L, obsess over your AR. Like, let's put that attention in the right spot. Like, if you want to look at something every day and feel like I am doing something every day that is going to make me successful, every day look at your AR. Definitely do that. Look at your P&L once per month, pull out a couple action items, and take action if you need to.
Excellent advice. Excellent advice. And I really like your message here on one or two action items. We have, implementation, integrating something new into the practice. One item can take that one change can
be a
really
lot.
take some work. Yes, it sure can. It sure can. This is Morgan. You've got some great, really fundamental advice and tips here. Very much appreciate this. Where can listeners find out if they want to dig deeper, they want to contact you or work with you?
Yeah.
How do they reach you?
Super easy. They can check us out. It is eagdentaladvisors.com.
Okay.
Eisner Advisory Group, Dental Advisors. EAG Dental Advisors. It's super straightforward website. I wrote it, so I'm biased. I think it's pretty clear. But it shows with some samples, kind of what we do. Super straightforward. And if they want to chat on every page or start a conversation, and that comes right to me.
Perfect.
Or they can email me at morgan.hamon@eisneramper.com. My business partner, Courtney, and I, we do all the initial consultations personally. We'll get with the doctors, learn more about their practice, and just see if it's a good fit, if we can help them. But always taking new clients, private dental only, and really love what we do.
Excellent.
Awesome.
Yeah, this has been terrific, and I look forward to following up with you and talking more. And that information about your contact information will be on our LinkedIn post.
Awesome.
Following this.
Too.
Okay.
And well, Morgan, thank you so much.
No,
thank you so much. I would love to talk with you. Yes, great to have you here. Thank you, everybody who's listening in, and those of you who'll be watching this shortly when we post it on LinkedIn. This is Alan and Sarah, Alan Hollander, Sarah Boylan from ePractice Manager. Morgan, thank you so much. We'll see you next time.
All right. Thank you very much.
Thank you, Morgan.